Hello, thanks for tuning into this episode. Before we start, FinTech Focus TV is brought to you by Harrington Starr, global leaders in financial technology recruitment. Head to the Harrington Starr website and check the links below so you can download the latest copy of the Financial Technologist magazine. And also, we've got the TradFi and DeFi Era of Convergence documentary coming up. If you're interested in the merger of the two, please get in touch. Thanks a lot and enjoy the show. Hello and welcome to another episode of FinTech Focus TV with me, Toby. Today I've been excited about this one for some time and absolutely thrilled to bring into the studio Roei from Connected. Roei, how are you doing?
Toby, thanks so much for having me. How is it?
Absolutely brilliant, thanks. And look, we've had loads of chats over the last couple of months and I'm really excited about your business, what you're doing. Your journey's fascinating, full stop anyway. I'm sure we can come into all of that. And then also you're in a really interesting ecosystem at a really interesting time. So this is an episode where you're going to have a whole load of stuff coming your way. So enjoy it. But Roei, before we get into all of that, tell us a little bit about you, your background, and the company.
Yeah, of course. So thanks for that. So I'm Roei, the CEO and founder of Connected. I've been working in technology and startup space for about 12 years now. I founded something in 2014 after initially working in product roles. I saw an opportunity when social publications started getting very popular and creators were wanting to get better opportunities of creating content, distributing it through social media. So created a bit of a content creation toolkit, helping them create podcasts, videos, all types of content, and then a community to share everything with. And with lots of things in life, got very fortunate, bit of right time, right place. Timing is everything, as we always say, and managed to scale that to about 8 million monthly active unique users, primarily UK, US, Australia. That business was acquired by a gaming company in 2018. And off the back of that, I was fortunate enough to start angel investing, advising startups, and going through that founder journey, I was really familiar with all the issues that founders have when it comes to raising capital, knowing how to connect with the right people, who are the good lawyers, who are the good recruiters, all the things that we struggle with on a daily basis as founders. But what I found to be really interesting is when I was sitting on the other side of the table as one of the grown-ups in the ecosystem, is how equally chaotic, unorganized, and just a bit of a mess the early stage startup landscape was. So I thought it was a really interesting opportunity to try and create a bit of an operating system to put structure, transparency, and data at the heart of the way people are connecting and evaluating what they have. Because we know that investing in startups is incredibly illiquid. Very difficult to change that right now. But doesn't mean it needs to be a total vacuum of information around it as well. Because when you combine illiquidity with lack of information, it's pretty much as unattractive as an asset class can get, right? I can't get my money out and I have no idea what's going on. So we thought, okay, cool, there's something we can do here. So we started off by building a reporting suite for businesses, which integrate with open banking systems, accounting softwares, payment solutions, and help them in a really frictionless way to drive insights into their own businesses, understanding how they're performing against other businesses within their segment. For example, actually we're really great at lifetime value versus other B2C fintechs who run a subscription model, helping them get that immediate feedback, understanding where they are within the ecosystem, helping them drive those insights to their teams, to their investors, to potential investors. And then we built a portfolio management system for VCs, angel investors, and family offices as well. So in the same way you'd have your ultra consumable dashboard for a crypto wallet or for public shares, we wanted to build something fit for purpose for this asset class. So allowing you to manage all the secretarial elements of what you're doing, how much you invested, when you invested, any terms related to that. But where it gets quite smart is if you verify you're an investor into a startup and the startup verifies that, we're able to pour all and aggregate all that real-time information into your portfolio management system. So it's a really great ability to get actually a real-time understanding of what's going on within your companies in real time in the way that you would with these other assets, which has been a really exciting journey. We launched it in Feb 2020. March 2020 lockdown hit, as you know. So
it's actually not a bad thing for
yeah,
is it as well?
Exactly that. Always an interesting time to go to market during a pandemic. So you didn't really know how that was going to impact, but obviously productizing the venture ecosystem at a time where venture was going online. Previously you couldn't imagine a VC leading around without multiple face-to-face meetings, let alone billions invested globally without as much as a handshake. So we were really well positioned. It's been a really exciting journey so far.
Comes back to that word fortune, doesn't it? Of being in the right place at the right time with the right idea.
Absolutely that.
And I love this because I'm a big believer in community, full stop. And I think we've spoken before about some of the books I've read about membership economies and such like. And what you're doing is something I talked about the not having the ability to do this years ago. Is recognizing there's a multidisciplinary bunch of people there who are all connected, who've all got the ability and the necessity to interact, understand each other a little bit more, and improve a system that's broken. And it's a simple sort of process to actually bring people together. At Harrington Star, our thought process all the way through, I think, has been say, right, how can we build community? How can we look at all of our different client bases and say these are all interdependent and let's put them together? And what I love about Connected and what you're doing is allowing businesses to thrive by putting people together and bringing and I guess demystifying quite a complicated area. So tell us about the whole. You've gone through the brainchild a little bit there, but where's it going? And I know you're constantly iterating and improving and growing and finding new things. Talk to us about the roadmap and what that looks like.
Yeah, it's really interesting. I totally agree with you on community, by the way, because I think with any marketplace, you're looking to solve two fundamental problems. You're looking to solve bridging the gap between differentiated supply and demand, and then you're looking to solve for the complexity in the transaction. Marketplaces like Uber, for example, very low transactional complexity. I want to go from A to B, great. I don't need to think about it too much. I want a pizza, I can order it from Deliveroo.
Yeah.
When you're making an investment into an early stage business, there's such a high level of transactional complexity that you need to provide value throughout. And community is such a core part of that because ultimately it's about how can you democratize the space? How can you help people connect with others? Not necessarily if they're just transacting. If they're looking to partner, if they're looking to share knowledge, there's so many well-meaning people in this part of the ecosystem. Being able to bring them together in a smart way, that's really what gets us excited. We have that very smart software, but that's the part that I love, absolutely.
Yeah.
In the way that you do. I think we're both of that psychological type. We like bringing people together, which is, you wouldn't be in your business if you weren't. So, I totally agree with you on that part. I think one of the really interesting things about where Connected's going and one of the reasons we've been able to work with the likes of Google and Goldman Sachs and very much punching above our weight for the stage that we are right now, only being 2 years old, is because traditionally people have tended to build software for transactions and build facilities for transactions at a later stage in the market because that's when transactions are 50 mil, 100 mil plus, where if you're taking transaction fees, it's much more sizable. When you're working with the early stage, obviously transactions going through are much, much smaller. They're a bit slower. They're a bit less predictable as well. And there are some different interesting issues around that. So for us, really what we're excited by is the picture that we're building of the ecosystem from a data perspective, because we're not talking about later stage companies where there's information online. We're not talking about companies which are publicly listed. All of the data that we're collecting, all of the picture that we're building up is all primary source. It's all coming from the brains, the minds of founders, investors, or people who are really within that ecosystem. So I think Bohurst recently released a study saying 76% of angel activity and activity in angel level companies is totally untracked and untraceable.
Is that right?
Yeah, absolutely.
Wow.
Yeah, because it's so opaque.
Makes sense,
right?
doesn't it? Yeah.
Yeah, it's so opaque. So that's really where we're trying to lay our grounds and say, we want to become the authority on understanding and helping improve that 76%, which currently is just a vacuum of data right now.
And you mentioned there that the software and the data side of things that's involved in all of this is the bit that is alongside all of the fun stuff around community and people and such like. There's this big part of the tech that you're changing the game with. So tell us a little bit about what that means and what that looks like. And
So for us, the way that we want to use our data is to bring people together in a smarter way, right? Bringing people together, especially in this ecosystem, when you might have a Series A founder is looking for something, a pre-seed founder is looking for something totally different. It's all about curation. So the way we want to use our data is to bring people together in that really, really smart way. But it's also an interesting way of starting to identify trends and, more importantly, giving feedback to the community. Because I think for a lot of businesses, when they're thinking about fundraising, when they're thinking about growth, when they're thinking about their own journey, because of the opacity within this ecosystem, I don't know how well I'm doing. You know, I can see a LinkedIn update from someone saying we've raised X much, or, you know, we're doing this, but what does it actually mean?
Yeah.
So the way that we're able to aggregate data across the ecosystem and immediately feed that back to businesses and to investors helps them understand how they're doing on their journey. So for example, they could see, oh, actually, versus other B2C fintechs at the seed stage, we're really, really good at our lifetime value. Or actually, our CAC is way too high. But it gives them that understanding on what they need to do to get better. And it's that feedback and it's that transparency which helps founders understand, well, why aren't they getting funded?
Yeah.
Why aren't they attracting the right people? And it's that immediate feedback that, you know, they value so much. And then from an investment perspective, again, when it comes to analyzing deal flow, what does good look like? What are the things that I should be looking at as well? A lot of investors have blind spots, as we all do. So it's really just trying to give everyone the tools that they need to grow, scale, and make it within that ecosystem. That's what we're really excited by with the data.
That investor side is really interesting, isn't it? Because for an industry where you think that should be such a sure bet to some extent, it's never a sure bet, is it? And we can see that from the amount of Series A backed businesses that fail is extraordinary and Series B as well, perhaps even more so Series B. So there's this huge vacuum of money that's invested from significant businesses where they're playing odds of small wins and small percentages and writing stuff off. And I think it's really interesting that, because, you know, in a world externally where data, you know, I know both you and I are big sports fans, as for example, and in a world where recruitment decisions are being made with incredible suites of data, I still think investment data and investment decisions are a little bit more almost finger in the air at various different stages. So businesses like yours that are able to add more value to that decision-making process are great from both sides of it. The other thing I want to touch on what you mentioned there is, you know, we use the phrase a lot, you know, comparison is the thief of joy. And I think sometimes you mentioned LinkedIn there as well, where LinkedIn is fantastic, and it's, you know, from a community-based you know, platform again. I think it's you know, fundamental to the way that we do business, and added huge amounts of value. The danger part of it, as all social media obviously has, is that there is that comparison element. So I think every founder, and you're very vocal as a, you know, and what I love about your LinkedIn feed is it's constantly got founder-based insight from the journeys that you've been on, very candid and very interesting stuff that you come up with. But it's also, you can sit there as a founder and constantly looking at one or two people, and whether that's actually fact or myth, it suddenly becomes your fact and your world, and you're comparing yourself on the wrong metrics sometimes against the wrong people on fuzzy data and fuzzy logic.
Absolutely.
And so what I like about this is it gives more empiric data on a wider skill, you know, set as to where you are and where you can benchmark and where you can improve things. And this is another interesting fact about me, about you for me, is there are so many founders at the moment, and I think the ones who are absolutely nailing it are coming from it. You mentioned at the start, and I didn't know we hadn't spoken about that before, about another person coming from a product background.
Yes.
And I think it's really interesting, that product background as a founder, because it means that you're looking at things with the customer in mind.
Totally.
And so what you're doing here is saying, right, let's look at every single thing, having been through this journey about what these founders are looking for, what the support they need, and you're walking the talk in terms of how they're doing, which gives you an insight to say, look, let's not just tell people what they want, you know, the Henry Ford faster horses thing, but let's listen, let's take that away, and let's constantly iteratively improve to provide something of real value, and make it a far easier journey for something that is statistically a very, very difficult journey for people to be doing at Series A and seed and everywhere through their business.
Absolutely. I think it's so important. I'm really glad you touched on that, because one of the things that I see a lot of founders do, which I want to almost, you know, have a sit down with them and say, listen, get your product into market, because it's all about that cohort analysis. You need to acquire a significant enough amount of users that you can have meaningful feedback to iterate and build a really meaningful product. And there are so many people who will spend a long time before releasing something because they want to get it perfect, but it's not the way to really approach product. And absolutely, if you're worried about the user experience of the first few customers, you're probably not in a big enough market. It's going to get better, and you need to be acquiring customers and paying customers to make sure that you're getting that feedback. Because we are really trying to build something which works for a whole ecosystem, we can take a very utilitarian approach to the way that we develop products. We're not at the behest of a large B2B enterprise customer where you need to start building very bespoke technology for them. We can really, really be as macro as possible with changes that we make to try and improve things for the whole ecosystem. So that's why I love the space that I'm in, because we can take that sort of helicopter view on it.
Yeah, it's a privileged position, isn't it, when you can be the fount of information. And that's an interesting thing for me to follow up with you as well, because look, we're at a stage at the moment economically where there's huge volatility for so many different reasons. And we were talking before we came on air about inflation and employment levels and everything in between, gas prices. So it's a very, very interesting time for people to be looking at getting investment, people to be investing at the same sort of stage. But what we've spoken about, I've spoken to lots of people about, I filmed yesterday to talk about, is that investment's there for good businesses. And what there is, in two instances, is a trade-off as to what that looks like. So what's the right money you're looking for, and what's the realistic multiple of your business to be looking at now that might have been different from 4, 5, 6 months ago. So when you talk about that elevated view of the marketplace and being in that very privileged position to see as many companies as you've got on the platform and everywhere in between, and constantly talking to both sides of there's not too many. I've had companies who are looking for investment on the show. I've had investors on the show. You're in this space where you sort of sit in between the two of them, which makes it fun. So tell me what it actually looks like here.
I mean, you're spot on in terms of how quickly this change has happened as well. I know a few unicorn founders who achieve unicorn status by raising at a 300x multiple.
Yeah.
Just insane multiples that you would just never get in this market right now. So things are so fundamentally different. These super rounds that you were seeing, back in 2021, early 2021, you're just not going to see for the foreseeable future. And I think as well, it also really depends on what type of capital you're trying to raise. For early stage companies looking to raise angel capital or family office capital, obviously for them it's about showing that you can commercialize and you can monetize at an early stage, even if you're doing unscalable things, but just showing that you understand how to monetize within your space is more important than ever. People are now more show me than tell me, whereas it used to be a bit more tell me than show me in a good market. Where I think I have seen it from VC perspective recently is it used to be a VC wants to do a deal and then will use as much confirmation bias as possible to justify why they want to do the deal at that price. Whereas now it is being much more financially led, much more focused on unit economics, much more focused on paths to profitability in a way that we didn't see for the last few years at all. I think it's a really, really interesting time for VC in Europe as well, because I think that a lot of European family offices, a lot of LPs who have been investing in venture capital over the last 10 years have seen venture capital as the asset that doesn't stop returning. It's just always the good times. They weren't necessarily there in 2008. Very few of them were there during the dot-com versus in the US. So I think first-time fund managers or funds who had amazing uptick in valuations during the huge rise of 2021 and now seeing the downtick of that, I think a lot of LPs will be hesitant to come back in immediately. So I do worry at the end of these fund cycles, the next funds might be a bit smaller in Europe. There is a lot of dry powder out there right now, but fundamentally the multiples are just far different. I read something recently, I think that the mean is 4.5x to 6x. Obviously there are exceptions to that, but we saw a company which we were discussing before raised at a 70 million valuation back end of last year and just raised at a 5 million valuation now. So there's a lot of blood in the streets for a lot of people. And that's an interesting thing for me, isn't it? Because you look at it and say, what time's right? So is it more realistic now, or was it more realistic then? Because both sides have got the argument for is there a middle ground? It's the same as recruitment, right? You've either got candidate-led markets or client-led markets. And there's very, very rarely that sort of perfect storm where you've got loads of clients and loads of candidates right in the middle. It swings very quickly from one to the other. And there's reasons for that obviously. But
when it's a candidate-led marketplace, you see unrealistic valuations of talent that puts pressure and unsustainable pressure on business. There'll be a correction that probably comes over the next 6 to 12 months that makes it a little bit more realistic for companies to thrive and people to be paid fairly for what they're doing. Conversely, when it's a candidate-led, you see companies take advantage of candidates and maybe pay under the odds of what they should do. And then when the market corrects, those people flock and leave. So from what you've just been talking about alongside that as well, if you're there and you're raising in 2021, you're at a scale that probably favours you as opposed to the investor. And conversely now, the investors then have the power and it moves the other way. So what's right?
It's a great question, but you're totally correct. Some of the term sheets that we've seen from VCs in the last few months, you haven't seen in the US for 10 years. That's how old school these terms are, because there is a bit of a halo effect of US venture capital in Europe, and if you can get a US VC involved, it's such a great thing, and they know that, so they do try and let's say they're a bit more bullish with terms they might be with a US company, but we're definitely seeing that accelerate now. And if you don't have good advisors who have seen it before, we've seen a lot of bad deals being done from a founder perspective. So exactly in the same way with the candidate market. But it's interesting. I mean, how do you see right now with the labor shortage, plus the fact that businesses are being able to raise less? I mean, that feels like it's potentially quite dangerous, especially when I think with remote work and the way it is, we're seeing more UK talent employed by US companies, for example, and there's maybe a bit more of a shortage for UK companies when they're struggling to raise more. I mean, how do you see it playing?
Yeah, this is a really interesting thing. Obviously, something which we've been talking about a lot. But I think there's some fundamental backstory to all this, in that there is a seismic change at the moment going on within the market, certainly the markets we work. So if you look at tech in particular and financial technology, there is, with blockchain starting to really get use case and move through, plus a whole cloud movement and everything that changed after the pandemic, and companies adopt a hell of a lot more cloud and interoperable technology. This is something there which has created another digital revolution in a marketplace that was probably under tech powered, despite being one of the most important areas in the world. And you're seeing a change of everything which is about friction reduction, about productivity, about cost reduction, and technology drives all of those. So what we're seeing in our space is a demand that will continue to grow for talent or tech solutions, which needs talent to power those tech solutions. And behind that, again, you've got a massive skill shortage.
Yeah.
So there, I read something a couple of not so long ago, which talked about a multi-million person global shortage in security engineers, cyber security engineers. So you've got a fundamental change in behaviour that isn't fueled at the moment where skill sets are. So I think it's quite an interesting. There's a wider piece there about skill shortages, full stop. But in technology, which is what I'm qualified to talk about to an extent, is I think there's just something there which means that there are companies who've got potentially less to play for, but they need to grow.
Yeah.
And they recognise that from 2020 that there is a need to adapt and take advantage of opportunity in the marketplace, of which there is again at the moment. And there are people who need to invest in talent. So those people are scaling up and working hard to make sure they're adding value to it, but are also, the number of people who they need just simply aren't out there at the moment.
Yeah, totally.
So it continues to say, right, so we have to hire to hurt, which means that we've got to pay a premium on what they're doing.
Yeah.
So it's a really, really interesting marketplace.
Yeah.
And I think it all drives around a genuine skill shortage that I just don't see going away, because there's only so many people who are coming through into technology positions. There's only so many people who exist in that. There's new technology that people need to reskill into. So it's it's an interesting proposition.
It's definitely there's no quick fix to it for sure, but I think the government needs to recognise this and needs to really, really double down, whether it's subsidising computer science courses, whatever it might be. But the government really needs to see this coming, because economically, I know that we've tried to do some really great things to help startups flourish in the UK. Some great tax credits around it, where especially for investment into early stage companies, but you can't address it financially purely. You know, you need the focus on getting people trained to do these things. And it's, I mean, I think, you know, we hire and Connected. We've got some, you know, 19, 20-year-olds who they scare me. You know, they're they're so much further.
Well, it's digital native, isn't it? That's the thing. Yeah.
But just to the nth degree, right? Yeah. They come in with a built-in proficiency tech stack, right? That every single one of them, you know, knows at least 6 or 7 softwares just to an amazing level. So it's really encouraging to see, but it's how they want to really focus those skills. A lot of them want to go creator economy, a lot of them want to go down the media route, but we do need more hard technical ability.
You see, this is the thing. I remember back in 2010, I was asked by BBC to come in to do a sort of skills workshop for Radio 5, I think it was. And they had various people who were long-term unemployed. And these were people who were relatively educated people who'd gone through degrees, and they were bemoaning the fact they couldn't get jobs, etc., etc. Yeah. And they were talking about how many people, how many applications they'd made and where they were doing it. But it wasn't necessarily looking at where the need was. Yeah. And the advice was quite simple at that sort of stage, is to recognise, you know, in 2010, there was need in various different areas, but these people were saying, because I've done this degree, I deserve to have a job in that particular area, and that's where I should be going. Whereas actually it's like saying, right, I can't get into there for obvious reasons at the moment because of economics. So where's the opportunity? And I think if we can start to as a government, to look at that and say, right, where is the future going? And I think it's pretty clear. And then give people pathways and better education, which I still think is massively lacking in schools. Yes. I think there's a whole thing, which is another story altogether, about how we're preparing people for work and life and all those sort of things, and what should be in curriculums to allow that to happen.
Absolutely.
And I think there's definitely steps and moves further forward with various initiatives, but we need to have a much more skilled country, particularly after Brexit and different challenges around that. Otherwise, it will stifle innovation. Yeah. And there is, this is a hub for excellent technology and innovation. There's loads and loads of great companies doing great things, and it will be hampered by talent. I think within that.
Absolutely. And I think in the UK, we tend to romanticize the arts, where really we should be focusing people on technology and learning, computer science, because I think. Certainly when I was in school. I wasn't in school that long ago. I think I left secondary school in 2008, so not too long ago. But back then, the idea was if you study maths, you can be a maths teacher. Yeah. That was the idea, right? Yeah. There was no education around, well, this is where things are going. This is what the potential is. So I totally agree. And this is why it's a generational change. There's no quick fix to it. Yeah. But things need to be implemented right now. Yeah. If the UK is going to absolutely, the UK is going to remain at the forefront of technology and stay as innovative as it can be. It's not just the financial measures. There needs to be hard work put in the ground at an educational level. And
there has been a lot of investment and incentive for companies to do well in it. But I think it's a step before that, and to maintain that, to make sure it still remains a great place to do business, still remains a great hub for technological innovation. And I know that there's a lot of ambition behind the government to continue to fulfil that and fuel that, because it is it's the ace in the pack effectively. But I think it becomes a really, really interesting time. So I guess the answer is that there's money available out there for people. People need to make sure they're realistic about their valuations, and when it's there, we can continue to see that thrive and climb.
Yeah, totally. I think the big focus now, the big change we're seeing is, whereas it was growth at all costs, it's now solid unit economics. That's the big change. And if you're going to try and raise significant capital, the unit economics have to work. Yeah. There's no more subsidizing CAC just to try and get people through the door. These models are not being appreciated right now. And if you're a business owner, you've got to reorient the business units that are going on to fundamentally favor the investor sentiment at the moment. And that's solid principles, good unit economics, and good burn multiples, most importantly.
But that to me seems sensible.
Yeah. We're getting back to real business, right?
This is where it comes to. It seems to, we talk about all of those sort of things, but I look at it and I look at some of the stories of the past, and when we talk about those failure rates, it's obvious why there's failure rates at various different stages. And actually, if you look at those principles, and this might be the answer to what we're talking about as well as the right valuation based on it before, is this is based around proper businesses being backed with good ideas to do things well. And I think that to me is the excitement. I like working with business. My favourite businesses to work with are sustainable businesses who are solving real problems, who are growing at good rates as opposed to exorbitant rates which aren't sustainable.
Exactly.
And I think there's a lot of problems that are tied up with that. I want to finish with a couple of bits and pieces. Number one is talking about that LinkedIn that we talked about beforehand. You are a fount of wisdom that comes, and I always look at it every single day, and I think there's another thing that's interesting and valuable to be sharing out there. But if you're going to sit there and talk about your journey, and you've had a lot of success in your career to date, and I know you were very modest about good timing and fortune and all that sort of thing, but I think proper planning allows good fortune to happen afterwards, and good work allows that to happen. To all the people who are sat there at early stages, who are maybe on their first journey or even on their second journey and such like, and you're saying, right, these are 2 or 3 of the principal lessons which I've learned, which I'll be passing down and talking to people about and saying this is critical to your success and how you can succeed and exit and achieve what you want to achieve. Tell me what those would be.
I think number one is the world is filled with people who never actually got it going. There's a lot of founders out there who are waiting for something to happen, waiting for something to click, waiting for it to come to them. Yeah. That's not how the world works, right? Yeah. And I used to be like that as a kid. You're waiting, finally, when am I going to get this break? You've got to go and make it happen. Yeah. Get the product out there. Start bringing on partners. Because there are far superior products with far less traction. It's just the way it goes, right? If you're bullish, if you get it out there, if you try and make things happen, you're going to go further than the one sitting in silence. Yeah. So I think that's the first one. I think the second one is if you're a first-time founder, you need a healthy bit of delusion because you've got no experience as a founder, right? Yeah. If you're in the second time of your journey, okay, learn those lessons. The first time, just be a sponge, be deluded because it's the only way it's going to work. Yeah. If it does work, is you don't really have much to go on. Obviously, surround yourself with the best team possible, but there is a healthy level of delusion that needs to happen for a first-time founder. And I think from a mental health perspective as well, entrepreneurialism is a journey and it's a career. It's not a project. And if you see it as a project and the project fails and your identity is tied into that project, it's going to cause you a lot of hurt and a lot of pain. If entrepreneurialism is a journey, it's littered with failures along the way. No one's journey is success after success after success. And that's why you've got to see it as a lifelong journey. Yeah. I think a lot of kids and people are being more entrepreneurial at a younger age now, which is great. But when you're 19 and this is the first thing you've ever done, it feels like this is it. Yeah. This is the totality of everything you're going to do. Entrepreneurialism journey. I've had some successes. I've had some horrible failures, especially investments that I've made. No better teacher than losing $100 grand on an investment. All these things along the way. But it is a journey, and you can't see it as project based. It's all learning. I know amazing entrepreneurs who didn't make their first successful business till they were in their late 40s, early 50s. It's a journey. So just try and accept the failures as they come and go.
I love that. And if you're going to say, look, the biggest challenge you've had over that sort of time. And I know that, as you say, that there's been some brilliant stuff that's gone through, and look, I think when I look back at your record, it's enviable. It's a great story. But tell me what the biggest challenge that you faced is.
You'll know this, Toby. It's all about people. Yeah. Right. It's all about people. And people used to say that to me, and I didn't know what they meant by it. I thought that was just like a fluffy thing to say. It's all about people, but it's not, because ultimately the best plans in the world require great people, and that means you need to treat your people well, and that means your people need to like you, and that's why culture's so important. It's all about people, and if you can't get the right talent, best plans still won't work. You'd rather go with the A team and the B plan than the A plan with the B team, right? Because the plan will change, the team's the team. So it's all about people.
This is music to my ears, because it's a soapbox thing for me. I think people sort of sit there and hiring becomes a chore as opposed to the integral part of their business. And that you mentioned it there about finding the best people, but also the damage of finding a bad person and allowing standards to drop and allowing all those things to creep in, or someone who's just poisonous around there as well. Because the more and more I look at it, going back to to sport and everything, I like reading and seeing around that sort of thing. But business stories, every single hugely successful business and people I've had on this show, even down to something I was one of the ones which I did yesterday, a great interview I enjoyed yesterday, is I know that the principal part and focus of that founder's business is around culture and making it a great culture and a great place to work. We're about to do the next Financial Technologist magazine, which focuses on the top 1% workplace. Now, this is one of my favourite times of the year, where the next 2 months I'm going to be speaking to founders, HR leaders, chief people officers, around what they're doing to make their companies great places to work. And I know that the people who are going to be at the top of that, there'll be another metric you'll see them at the top of, which is growth and success and revenue and all those sort of things as well. And the people who aren't necessarily doing it and putting such a premium, or not even applying to the awards, will again be a little bit lower in terms of where they're going, and they're probably being in that conservative category of enduring this next couple of years, rather than saying how can we really explode through the next couple of years. So I'm pleased you said that. I'm pleased you asked that question.
Yeah, no, really interesting, amazing.
So Roei, let's ask one last thing. So the connected, something which I love. We've spoken about it a lot. I've seen a lot of it. I've read a lot about it. I've seen the numbers of where it's going and where it's heading and what you're doing. It's a special movement at the moment, and it's really, really exciting. So tell me, who should be connecting with you? Pun intended in that instance. But who should be reaching out to you? Who should be involved in Connected? Who do you want to speak to, and how do they do that?
Yeah, thanks for that, Toby. I really appreciate the kind words. It means a lot as ever. With Connected, we have built a productized version of the venture ecosystem that's for VCs, institutional investors, founders, angel investors, advisors, people who are involved in this ecosystem but want a more efficient, more transparent and structured way of managing their networks, discovering new networks and growing their networks, should absolutely be using Connected.
Perfect. And what's the best way for them to reach you?
Ping me on LinkedIn as ever and go follow the content.
And I tell you what, enjoy the show when you get that content coming through as well. Roei, it's been an absolute pleasure having you on the show. Thanks for coming on, and thank you all for watching. We'll see you soon on our episode of FinTech Focus TV. Thanks a lot.
Amazing. Thanks, Toby.